Welcome to The Explainer. Today, we're diving into a financial head-to-head, pitting two mineral resource companies against each other, Texas Mineral Resources and NioCorp. You've got one company that's lean, totally debt-free, and then you've got this bigger, more ambitious player. So let's see what the numbers really tell us.
All right, let's get right to it. In the ring today, Texas Mineral Resources Corp. and NioCorp Developments. Now, you might think they're in the same business, so they're pretty similar, right? Well, not so fast. Their financial stories are worlds apart.
Okay, first things first. Let's talk about the sheer size of the fight here. To really get a handle on how these two stack up, we got to start with the basics, and that means market cap.
So in one corner, you've got Texas Mineral Resources, clocking in with a market cap of just over $90 million. That puts them squarely in the small cap category.
And in the other corner, NioCorp Developments, weighing in at over $317 million. Yeah, that's more than 3 times bigger than its rival.
And when you see it on a bar chart like this, wow. It really drives home that size difference, doesn't it? This is not even a close race. NioCorp is the clear heavyweight here. And, with that kind of scale comes totally different expectations and a whole different set of resources.
But hey, as any investor knows, size isn't the whole story, not even close. So for our next section, let's pop the hood and take a real look at their financial health. We're diving into the balance sheets.
And the very first thing that just leaps off the page is debt. Get this, Texas Mineral Resources has 0 debt per share. None. That's a pretty bold statement about their financial discipline. And it's a huge contrast to NioCorp, which, as you can see, has a much higher debt load.
And that theme of discipline just keeps going when we look at working capital. That's basically how well a company can cover its short-term bills. And once again, Texas Mineral Resources is looking stronger here.
Okay, but here's where the plot thickens. When we look at straight-up cash, the tables kind of turn. Texas Mineral Resources actually has less cash per share. So yeah, they're debt-free, but they're also running with a much leaner cash cushion.
So what does this all mean for profitability from their main business? Well, if we look at EBITDA, and that's just a fancy way of saying earnings before all the accounting stuff like interest and taxes, TMRC comes out on top again. It suggests they're more profitable on an operational level, at least based on this snapshot.
And this really brings the whole picture into sharp focus. You add it all up, and TMRC just has fewer liabilities overall. It's a classic strategic choice, right? TMRC is going for that lean, mean financial structure, while NioCorp is using leverage to get bigger.
So that's the what. Now for the who. Who's actually buying into these very different strategies? To figure that out, we've got to look at who owns the shares. Let's break it down.
When you look at Texas Mineral Resources, the ownership is pretty much wide open. This chart shows us that a whopping 93% of their shares are what's called free float. All that means is that they're out there on the open market for pretty much anyone to buy.
NioCorp, though, totally different ballgame. Look at this. More than a third of the whole company is closely held. That means insiders, major shareholders, they own a huge chunk of the stock, and it's not being traded freely every day. So, why should you care about this? Well, when you see a big percentage of closely held shares, like with NioCorp, it can signal a couple of things. On the plus side, it could mean that the people who know the company inside and out, the insiders, are really confident. They've got skin in the game. But the flip side is that it leaves less stock for the rest of us to trade, and that can affect liquidity.
Okay, we've covered size, we've looked under the hood at the financials, and we've checked out who owns the stock. Now it's time to bring it all home for the final tale of the tape.
And this scorecard lays it all out perfectly. You've got Texas Mineral Resources, smaller, more nimble, no debt, and mostly owned by the public, with what looks like stronger operational earnings right now. Then there's NioCorp, the big heavyweight, but carrying more debt with a big chunk of ownership concentrated with insiders. So at the end of the day, the data doesn't really shout out a clear winner here. What it does is paint a picture of two very different companies with two very different strategies. And that leaves us with the real question, the one for you to think about. What kind of investor are you? Do you go for the stability of a debt-free company? Or do you bet on the potential that comes with bigger scale and that strong insider belief? The numbers tell the story, but you write the ending.